welcome back. You're still watching Hot Stocks right here on ETNow. As promised before the break, Sunil Dugal, who's the CEO of Daburindia, joins us on the show this morning. Mr. Dugal, thanks very much for taking out the time. Reports suggest that shampoo sale volumes have been impacted severely due to competition, and margins in this segment are also getting weaker. What's your initial assessment of how business is shaping up?
See, the volume growths are all right. I think the problem is with the margins. The margins have contracted because of very intense competition in this category, which we all know about. But the volume piece is much better than what the margin situation is.
Also, the oral care segment is affected due to small price hikes and increased competition. Do you see there changes happening?
The margin, yes, again, like in shampoos, the margins have contracted in toothpaste because the price increases haven't been commensurate with the increase in the material prices. But the demand side is fine. We're seeing good growth happening in the first 6 months for all the three brands, and I don't think there's any problem with the growth outlook. We just have to see the margins correct, hopefully on the back of lower raw material prices or price increases. And when that happens, I think we'll have robust growth both as on the margin front as well as on the revenue front.
The question would be, Mr. Dugal, good morning, this is Neeraj Shah here. The question would be, when does this indeed happen? Do you see the likelihood of margins shaping up a bit better in the second half of the current fiscal?
I think the first 6 months we've seen the worst of inflation, particularly in the second quarter where it was the most intense. We were sitting on very high material inventories. And now going forward, there will be two factors which will come into play. One is the price increases, which will fully come into play by the third quarter, and they will help mitigate some of the margin erosion. And second, we do see some signs of cooling off of commodity prices. In fact, the base commodity prices have cooled down considerably. Unfortunately, the rupee-dollar parity has worsened, so that's in a sense mitigated some of that impact. But overall, we do see some cooling off, and I think the margin outlook will definitely be more benign in the fourth quarter, definitely, and even in the third. But overall, for the year, it will be certainly much lower than what we saw last year, the overall margin position.
In that case, what is your growth demand? What's your outlook on growth for the next 2 quarters? Your peers have cut growth guidance on demand concerns. Is that something that concerns you as well?
Well, we did see some softening of demand, particularly in the second quarter. Signs of that were visible even in the first, and that was on the back of these very high price increases. Now, going forward, the demand outlook is a little uncertain. I personally expect demand to revive because of the good monsoons and the good agri output. So I do see some revival in demand happening in the third and fourth quarters, but it's a hard call. Overall, there has been definitely some contraction of demand this year as compared to last.
What is the impact then on the currency movements, the rupee's depreciation of Dabur's financials? Are you concerned about it as imported raw material expenses may increase?
Well, that's pushed up prices of some materials, particularly the oil table. Despite the fact that oil prices have come down, the prices of the downstream products have not because of the adverse parity. Now, it's anybody's guess as to what the rupee-dollar parity would be in the next couple of quarters, but we've probably again seen the worst in terms of the rupee being depreciated. And hopefully this will again come into our favor going forward. But at this point in time, the parity is definitely adverse, and it is impacting some of our raw materials which are imported.
Mr. Dugal, let's talk about your acquisitions and your investments globally as well. Starting off with, by when do you think that the Namaste and the hobby acquisitions could start contributing to revenues? Because if I'm not wrong, they're still in the investment phase.
Well, both these acquired companies are accretive. Namaste is considerably accretive in the first year of its acquisition. Hobby marginally so, but they are not a drain on our P&L. And while they are still in the investment phase, they do spin off substantial amounts of cash, and overall they help improve our margins.
Are you worried about the overseas business performance due to the economic slowdown? Because a lot of other companies in other sectors as well talk about how the overseas business remains a bit of a black box. What's your sense for Dabur?
Well, if we do nothing, that could easily happen. But what we are doing is we are rapidly expanding the Namaste franchise into Africa, and that will really serve as the growth driver for Namaste business more than the existing markets, which are primarily in the US. The US market obviously is not going to grow very fast, but the African market should take up the slack, and overall we should see a very decent growth pattern coming out of Namaste.
Analysts estimate about 17% EPS growth for FY12 and over 20% in FY13. Will you be able to achieve these numbers?
I think to achieve that, we would have to see some cooling of inflation. If that doesn't happen, then 17% is not going to be easy to get. But if we see better picture emerging as we hope so, then 17% is definitely possible. So I wouldn't really bet on it at this point in time. Let's see how things unfold in the next couple of quarters.
What about market share retention measures at this point in time that Dabur is taking? Will you look at raising ad spends?
Well, we've been able to hold on to market shares despite cutback in A&P, but I don't think this is sustainable over a long period of time. We'll need to ramp up the A&P spends, which we will be doing in the third quarter and continuing into the fourth. And also, like I said, the new product introductions, which will happen in the third quarter, will require a substantial dose of A&P. So the ratios would go northwards, definitely, and we would need to do that to sustain our competitiveness in the marketplace.
All right, Mr. Vigil, I'll leave it at that. Thanks so much for joining us today and giving us that perspective. That's the view from Dabur on a number of issues, including margins. They would remain soft this quarter as well. Hopefully, some bit of price rise would ensure that the margin erosion is not as severe in Q3 and possibly Q4. 100 rupees is where that one is trading. FMCG, oil and gas would have had a bit of a dull day today, but look at some of the active names and some shorts getting squeezed out here. So Jubilant Food Works, 5.5% higher, similarly for our Holta and a TTK Prestige, as well as for the entire sugar pack. There's definitely some bit of short squeeze that is happening for the kind of move that some of these stocks have made. Not bad.